What up, y'all? This is yours truly, MJ Worthmore, legalconartist.com, and I want to say thank you for watching this video. If you are watching this video, it is more than likely because you either got a copy of my ebook, you bought a copy of the physical book, which I appreciate, or you found this video because a friend recommended it to you and you clicked on the link and you want to know what is quarter level theory all about and how do I use quarter level theory so that I can effectively mark up my charts because I'm a Forex trader and I want to know what are these bank levels and these quarter levels that MJ talks about all the doggone time and how important are they? So I want to show you really quickly. I want to go to a chart with you right now on my live trading view account, show you exactly how to mark up quarter level theory. I'll explain it to you in some pretty good detail so that way you get it, right? And then I'll show you how quarter level theory actually works for you because y'all know, if you don't know, I am a price action support and resistance trader, right? My philosophy is very simple and it's the reason why it works and why it's working for not just me, but for everyone on my team. Everyone, not just some of them, not most of them, not a few of them, everyone. It is working for everyone on my team because I teach people a very simple philosophy, which is buy the floors, sell the ceilings, buy the floor to the ceiling, sell the ceiling to the floor, right? It's very simple philosophy. And I understand how banks move price in certain levels. So I want to go ahead and dive right into my trading view account. And I'll go ahead and show you what we got going on. By the way, if you're watching this video on YouTube, please do me a favor and smash the subscribe button. If you like this video, if you find value in this video, then hit the like button, but subscribe to this channel so that way my wife and I can constantly add value to your life, teach you how to trade profitably, consistently profitably, also give you all kinds of motivation, inspiration, all kinds of cool bonuses that we give away on a regular basis. But we want to make sure that you subscribe to this channel and smash that like button, especially if we earned it. Only if we earned it, right? If we earned it and we added value to your life, helped you figure out something that you didn't know before watching this video, then by all means, please hit that like button and leave a comment. Leave a comment, let us know what your major takeaway was, or if you got more questions, and if you'd like to talk to me personally, right? So without further ado, let's dive right in. I'm going to share my screen with you. We're going to go to the trading view chart. I'm going to clean one up real quick, and then I'll show you baseline how to get into quarter level theory. Ready? Let's go. So I'm going to go ahead and clean this up. This is a pair that a lot of people like to trade. This is a all CAD. I'm gonna clean off my indicators here really quickly so you can't see any of that. Just get it all out the way. We just want a completely clean chart, right? Excellent. So what do we have here? We have all CAD, right? The Australian dollar versus the Canadian dollar. Now, first and foremost, what is quarters theory? In short, without giving you a 1,700-page diatribe, quarters theory is that banks move money in levels, and these levels are first separated by increments of 1,000 pips, and then they're divided into 4 quarters. So those quarters are 250 pip increments, 250 pip ranges. And this is where you'll see a lot of swing trade opportunities. These are those opportunities where you can literally identify when one of the quarter levels is acting as a support or as a resistance, check for price action. And if you use indicators like the moving average or the TDI, you know, you can confirm that move. But realistically speaking, just being able to look at basic structure, looking at candlestick patterns and seeing how price responds to a specific price point will allow you to jump in on a move and seriously ride the wave all the way to the next quarter level. So I want to show you first and foremost how to mark that up using UCAD, right? So this traditional pair. Now, one of the main things that you'll need to know in order to effectively do this is pip count. You will need to know your pip count, okay? So a lot of people, and I'll just go ahead and just put the text on real quick. A lot of people have to even master a 1,000 pip range. A lot of people, they don't even know that there are 10 pippets in a pip. So I want to show you really quickly how to do this, okay? So look at it. So we've got here 1.00000, right? It's 5 numbers after the decimal place. What most people don't know is that this last number right here is not a pip. This last number right here is called a pipet, right? It is 1/10 of a pip. So this last number, if you're looking at your MetaTrader, this last number right here, that's the one that looks like a little exponent. I call it the gas station number, right? Like, you know how you go to get some gas. It's like, how much is a gallon of gas? And it's 247 in a night. What the hell is that ninth, right? Well, just think of it like that, right? That's that number that looks like a little exponent that's constantly fluctuating. And truth be told, that number is really the most important because the pipet is it's the increment that determines how much you make or lose on any given trade, right? Because your lot size is the exact amount of money that you will make or lose every time the pivot moves, right? So if you're trading with a 1.00, which is a standard lot, then that means you are making or losing $1 every time the pivot moves, right? And there are 10 pivots in the pip. So if you're trading with a standard lot, that's why it's $10 per pip, because it is $1 per pivot. You feel what I'm saying? If you're trading with a 0.50, well, that's 50 cents per pivot. So because a 0.50 is 50 cents per pivot, and there are 10 pivots in a pip, a 0.50 is $5 per pip, and on and on and on. Okay. So now we just go back to second grade and look at basic math, right? We know that that is the ones place for pivots, right? This is the ones place for pivots. This last number is the ones place for pivots. So if that's the case, if this is the ones place for pivots, then that means this number right here, this 0, will be the what? The tens place for pivots. So if this is the ones place and this is the tens place for pivots, then that means this place right here is the ones place for pips, because it takes 10 pivots, 10 total pivots to make one whole pip. Okay. So now that we've got that, we say, okay, cool. This is the ones place for pips, meaning this is the tens place for pips. This is the hundreds place for pips. And this is the magical thousands place for pips, right? And that's the most important one that you got to know. This number right here, the one right after the decimal point, is the thousands place for pips, right? That's the golden number, right? That's going to be the determinant to help you mark up your quarter level, okay? So now that we know that the number right after the decimal place, if you're trading with a pair that has 5 decimal places after it, like the USD pairs, the CAD pairs, things like that, you'll know that that number right after the decimal point is the 1,000th place for your pips. Now, the rule for JPY pairs and for indices and for metals and for cryptos is different. We'll do that in a different video because that's a bit more advanced. This is just for my beginner traders who are really just getting into really understanding support and resistance and quarter level theory. This will help you cook any of the traditional pairs. I promise you. Okay, we'll do the JPY pairs and the gold and all of that. We'll do that in another video. I promise. But for right now, let's just focus on these traditional pairs. Okay, so since we know that that 1,000 pips range is that number right after the 0, right after the decimal point, what you want to do is you want to establish your areas where you can actually start to mark up your 1,000 pip range. Okay, so I do that by going to the 4-hour chart. Right now, at the 4-hour chart, I'm looking at where price action has been over the course of the last few weeks, few months, and we see that it's really been in this range here. Right, we see that it's been in this range right here. Okay, about 492 pips. That's a 492 pip range. Okay, so we say, okay, cool. We need to mark up this area. So how do I find what the 1,000 pip range is so that way I can find the quarter levels, which is the 250 pip range? First thing I'll do is I'll come over here and I'll grab my straight line tool, horizontal line, right? And I know that, again, the number right after the decimal point is the thousandths place for pips. And I see that it's been operating in that 0.99, 0.95, 0.97 range. So we know that 0.9 is a major area, 0.9. So what I'm going to do is I'm going to make my line down here, okay? And I'm going to make this 0.9. We know that it's been operating in the 0.9 range, okay? For the coordinate, I want to change that to 0.9 flat. Perfect. And just for me, I like to make my 1,000 pip increments, my 250 pip increments black in color, and I'll show you why, right? So we know that 0.9 is where the 0.9 range then where it's been operating at, right? So if I add 1 to the 0.9, I know that I'll get 1.0000 flat. And that gives me my 1,000 pip range, right? And if we look, if I put that line up there and I change this to 1.0 flat, check that out. You see that 1.0 flat acts as a beautiful area of resistance, right? That's a beautiful area of resistance. Now, as we can see, there's a lot of space in between those. But check this out, right? 0.9, as you can tell, historically acted as an area of resistance before, right? It acted as resistance right here, acted as an area of resistance right here, for a little bit, acted as an area of resistance. It was kind of choppy in this area, but it was, it was a struggle for price to break through in this area right here, right? When it did break above, it acted as a support right there, right? Because we know that a general rule of thumb is that an area is truly a key area if it acts as both support and resistance at some point in time in history, right? So we've got that line at 0.9 flat. So we already know that there is a 1,000 pip range between 0.9 and 1.00, okay? So now we need to establish our quarter levels, right? Our quarter levels is 4 250 pip increments in between these two price points of 0.9 and 1.00 flat, right? So we know it's a 250 pip range. Then what do? We add 250 pips to 0.9, which gives us 0.9250. So go back to my horizontal line tool, right? And I'll add my line there at 0.9250. Okay, make that nice and clean. Sometimes when I click the button, it gives me two lines, but it's all good. We'll use that. So 0.9250 will make this a quarter level. 0.92500. Boom. 250 pip range. Okay. And the next one, of course, naturally will be 0.95. 0.95. Boom. Right there. Okay. And then, of course, the last one is going to be 0.975. And we'll put that right here. Okay. 0.975 flat. Check it out. Cookies, you smell it. Now you see it right here. It acts as even more areas of support and resistance. And you know that each of these ranges is 250 pips. So if you want to talk about swing moves, swing trades, where you take less trades but crack more pips, you already know. The main thing you have to do is look at price action on these pairs, right? Because here you go. Here's a perfect example. Let's say you're a swing trader. In the swing traders, we like to make our directional bias off of the 4-hour chart. So here, just looking at this as a swing trader, if I knew that 0.925 was a quarter level, I know that I'm waiting for price to show a tan. I'm waiting for I'm waiting for it to react to this line, right? And I'm a candlestick trader, pure technical analysis. Don't even worry about the news. I'm not even worried about the news. I'm not worried about fundamental analysis just yet. I just want to see pure technical analysis, right? Now, with just looking at this, without even thinking about any moving averages for sniper entry or anything like that, if I just saw, and I'll use the bar replay tool, right? Here's another thing. I try to wait for my trades to come to me. I like to wait for alerts. So I'll set an alert at 0.9250. Okay. Now I'm gonna show you this. Here's real life how this works out, right? So as a matter of fact, we'll take it back just a little bit more. So let's play this out real life. Okay. So it is October 20th, 2020. This candle opens up at 5 p.m. It's going to close at 9 p.m. Right. So let's play it out. One candle. Boom. At 9 p.m., I got an alert saying price has reached a major quarter level, right? So now I know to pay attention to price action because I want to get the closest possible entry at 0.92500 flat. I just want to know if I'm going to be buying it and riding it back up to the ceiling, or if I'm going to be selling it because I'm waiting for it to break through support and then come back up and retest it as a ceiling, and then just ride it down to the quarter level of 900 flat, right? So now it's just a matter of waiting to see what happens. I need confirmation, right? I need revelation and confirmation. That's something I teach all of my mentees, okay? Now, again, if I'm just waiting for the 4-hour chart to play out, let's see how it plays out, okay? Next, I get another alert saying that the line has been tapped again. All right, now just looking at this, I'm seeing that this trade is not, or this price point is not breaking through 0.925. So I'm like, okay, I'm waiting to see if maybe I get some directional bias, get a good turnaround. Next candle, boom. Now, if you just look at this, just pure, that's, my friends, some people will call that a bullish engulfing. Other people will call that a railroad track. Either way it goes, I call that entry, right? I call this an entry because this candle right here does engulf this candle right here. This is a good entry, right? So even if I was like, I'm gonna just take this shot and see how it plays out, here's how I'll make the entry, right? I make my entry right here at the close of this candle. And if we look up here, you'll see that the opening price high price, low price, and closing price is shown. So the closing price of this candle was 0.92627. You probably hear my son in the background. Just woke up from a nap. 92627, right? So let's say I went long, because when you buy, you go long. I went long from that price point, 92625, right? So what I typically do is I try to give myself a 25 pip stop loss underneath this major quarter level, because it can reach down and it can crack a minor quarter level, which is 25 pips. And we'll talk about that in just a second, right? But let's just say I made my entry right there and I say, okay, cool. If these guys reach down and knock me out, they stop me out, they've got to reach down 25 pips below the quarter level, which means I may have just jumped in on the trade too early, or just pay attention to price action and see. But either way, my risk, right? A 25 pip dip under 92500 is actually going to be 9225. So let's put my stop loss there, 0.92250. Okay. My entry was 0.92625, right? I probably would have set a limit over there because I just like nice clean numbers. Okay. Matter of fact, now let's be fair. Let's just say 9267 or 627, right? Because we slap market execution buy right at the end of that candle. Okay. So let's say that that's our entry. Now, our reward, if we did this right, our reward is way up off the plus, right? It's all the way up here, right? Up to that quarter level. And as you see, 237 pips is the reward, 237 pips, right? I teach my students how to be able to pay their bills off of 10 pips a day. This is 237 pips. So even if it took, a week or a week and a half to fill this order, I mean, it still beats the average of being able to pay your bills off of 10 pips a day, right? So now we just play this out. Let's see if we get stopped out. And if we don't get stopped out, let's see if it actually goes up to our target. Okay, here we go. Play it out a little bit faster just to see. As you see, just 3 candles in, we're deep in profit, right? Let's see how it plays. And it goes and goes. You're all the way in profit. All right. Now, this is where people get scared because they saw the dip, but check it out. You see it hit your target, 250 pips, clean move. And of course, it was 237 pips for your entry, but check that, right? Now, here's the crazy thing. You made your entry at the end of this candle. You made your entry at the end of this candle, October 20th, 2020, right? And then the order filled and hit your ultimate TP November 5th. So between October 20th and November 5th, that is 16 calendar days. It took 16 calendar days to crack 238 pips. Let me do the math on that. I'm gonna go ahead and pull out my calculator real quick, right? But let's just say 238 pips. 238 divided by 16 days, 14.87. So that's an average of 15 pips a day. Remember, I teach my students how to live off of 10 a day, right? So they've already exceeded their goal. But let's just put it in perspective. Forgive me, tongue-tied. Put it in perspective. 237 pips. If you're trading with a standard lot, which is, again, $1 per pipette, $10 per pip, that's a $2,300 move, right? Who else do you know that can take one trade, right, or crack the button one time, wait 2 weeks, and next 2 weeks or 2 weeks from that point, you got $2,300 extra dollars? Are you kidding me? Like, that's what some people make in a month working 40 hours a week at their job. You made that in 2 weeks with one trade. And these setups happen all of the time based on quarter level theory. You just got to know when to be able to jump in on the move because you understand price action. If you don't understand price action, get with me. I'm a phenomenal price action trader. I hardly lose any trades anymore because I understand price action. I trade it very well. I'll teach you how to do the same thing. But most importantly, I know when to check for when I should be getting in a trade or when I should be getting out of a trade because I understand quarter level theory, right? All that was 250 pip move. Now, check this out. I want to give you 2 other quick tidbits and I'll be on my way, okay? Because every now and then I'll talk to somebody and they say they got a signal and they're like, how do they see TP1, TP2, TP3? Let's make it real easy for you, okay? Now, looking at this one right now, this is where AuCAD currently is April 16th, 2021, right? And as you see on the 4-hour chart, it bounced off of 0.95 and it looks like it was going up to 0.975, but it looks like it failed before it turned around. Why? More than likely because it hit a minor quarter level and it decided to reverse at the minor quarter level. But it's cool because when you know where the minor quarter levels are within the two major quarter levels, you can set your TPs for 25 and 50 pip increments, and you can know when to move your stop loss, because a TP is getting hit. Let me prove it to you. Between 0.95 and 0.975 is 250 pips. So if you know it's going to be 250 pips increments between one quarter level and another, then that means there are 10 mini levels in between at 25 pips apiece. Why? Because 250 divided by 10 equals 25. Think about this. Banks like to use numbers that end in 0 and 5, right? So first thing I would do is just find out my 25 pip increments, and those 25 pip increments then become my take profits when I execute a trade, right? So 25 pips up from 0.95 is 0.9525. Okay, now this is the part where a lot of people say, oh my God, there's so many lines on your chart. I just know what the quarter levels are, what the minor quarter levels are, because I've done it so much. I don't need to put them on my charts anymore. But just for practice, you might want to put it on your charts just so you can see those for yourself and you can know where to set your TPs. Okay, so I've got a minor quarter level at 9525, which means the next minor quarter level is at 955 flat, because it's just like adding a quarter, right? 25 pips. Okay, and I put my minor quarter levels in blue, 2 pixels. 955 is that one. Next one up is 95, you guessed it, 75. Okay, 9575. Next one up after that is 96 flat. See how clean this is? You see how price is reacting to these numbers? 96 flat is that one. And I know this is a little bit of a longer video, but I wanted to make sure I went into really thorough detail about this, because I'm telling you, once you learn this strategy, once you learn it well, oh my God, it's off to the races. It's cookies. It's cookies. It's like cookies and cake for breakfast. Okay, 9625 is the next one. Now, this is a nice little area that I want to stop at and talk about, because if you look, right, you'll see that 9625 is an area where price actually has rejected and turned around a couple times, right? I call this level the median level. It's that middle ground between the two major quarters. And I always try to make sure I mark that one up in red so that way I can pay attention to it, because it is an area, if you check historically, it's an area that can act as, check it out, support right here, acts as a resistance right here, resistance right here, resistance right here. So now, if I were to take this trade, right, just looking at my entry, because I see a beautiful morning star right off this 4-hour chart, truth be told, I probably would have looked for a way better entry off of the rejection of this line, maybe on the 15 or 30 minute, but we'll deal with that in a different video. But just seeing this entry right here, even if I just took this trade right here and went in long from this entry, and I just wanted to play it safe from that entry to the red line, and my stop loss in this particular case being 38 pips, because I was just like, hey, listen, like I want to get stopped out if it comes back to the line based off of this crazy aggressive morning star. The risk here, 38 pips. The reward here, 84 pips. This is a 1 to 2.25-ish risk reward ratio, right? And that reward is 84 pips, right? And if you look, thinking about this entry, you made this entry April 1st at 5 a.m. And when did it hit your target? It hit or activated here, April 1st. Well, you actually, because it's a 4-hour chart, you took the order at 9 a.m. So 9 o'clock in the morning, April 1st, you crack the buy button, market execution. And then on April 6th, right? So you took the trade April 1st, April 6th, basically 5 days later, you are 85 pips up, right? One trade, 85 pips over the course of 5 days. So 85 divided by 5, 17 pips a day average. Again, how many pips do you need to live? 10. Like $100 a day can supplement somebody's income, replace a lot of other people's income. Like 17 pips a day, standard lot, it's $170 a day. That's one trade, right? And as you see, it kept going up. It actually kept going up, and it went to, if you check it out, it went to another minor quarter level. So here you go. The quarter level above 9625, minor quarter level is 0.9650, right? I'm gonna clone this blue line so I can go back to getting my my blues. Here we go. And I want to change this to 9650. Okay. Boom. And as you see, it touched that line. So if you just had a take profit for every minor quarter level above your entry, you'd have been cooking, right? If you got your entry right here, you could have had a take profit right here. That's TP1. And this would have been, so from here up here, let's see what that range is. Oh, I don't know what happened. There we go. Let's see what that range is real quick. Okay, so from your entry to that TP, that's 34 pips right there. Some people would have taken that trade and be like, yo, I'm done, right? But you got a TP1, 34 pips up. TP2 is 58 pips up, or basically 60 pips. TP3 would be right here, which is 82 pips, right? And then TP4, if you wanted to keep reaching, would be right there, 108 pips, okay? So you could literally set 3 or 4 TPs and just let it run. And every time you get an alert, because I love using that alert part up here, every time you get an alert, you just move your stop loss in, right? And you would have cooked that trade for 100 pips, okay? And as you see, it would have hit that right there. And then it would have turned around. You would have seen that if you're a price action trader, once again, you would have seen that this right here is a railroad track or a tweezer top to some people. You got a tweezer top at 0.950. Get out of the trade. It's cool. Move your stop loss in deep. Maybe move your stop loss in right here. So that way when it turns around, it kicks you out. And you basically had a bunch of positions hit for like 83 pips a piece. Okay. That is how you take trades like these. And that is how you use quarter level theory to your advantage. So what I just showed you, again, is how to mark up your chart, okay? How to mark up your chart and establish your 1,000 pip range, how to establish the major quarter levels in between, and how to establish the minor quarter levels as well as the median quarter level based on these charts. And realistically speaking, all you have to do is trade from the black line to the red line. That is my swing trade strategy, black to red. That's my swing trade strategy. I call it the black to red swing trade strategy, right? Easy, okay? So all you need to do is learn how to set alerts at your major quarter levels. And then when you get an alert, evaluate for price action. Again, for me personally, I wait for price action to show up, and I usually make my entries off of the 30-minute, right? Because I like to get crazy sniper entries, okay? So I'll show you how this would have played out, and I'm out of your hair. And I want to say thank you for watching this video, right? So cool, check it out. Look at this. We got this crazy shift candle right here that comes down and sets my alert off. And then you get what I teach my students. You get a doji, which is a revelation candle. Revelation candles to me say that seller exhaustion has entered the picture and buyer presence is now here, right? So we got the revelation candle. We got a little bit of a push, but then we got a turnaround. We've got another doji right here, right? So I would have waited for all of this revelation to finish, and then I wait for my very next candle, which is the confirmation candle, right? Because you got to have confirmation before you pull the trigger. Now, that would have been a crazy sniper entry, right? Off the 30-minute chart, okay? So realistically speaking, this would have been my entry right here. Boom. And now I can actually make my stop loss right underneath that longest wick, right? I try to give it like 5 to 10 pips underneath the longest wick. And here you go. Now you see my true trade, right? And as you can tell that the risk to reward on this thing is, I see it, risk reward 1 to 5. 1 to 5 risk reward ratio. And the pips, if you were to cook all of those TPs, 138 pips. That is how you cook these markets. That is how you bust down these trades using the quarter level theory and using my black to red line trading strategy. So hope you found some value in this video. I truly hope it helps you. I hope you not only watch this video, but you actually go apply it now. Go apply it to your charts, mark it up, make it nice and clean, back test this strategy, use that bar replay tool. My mentor, my virtual mentor, Swaggy C, and my actual mentor, Coach Jojo Charles, they both said, use that bar replay button, sharpen your skills using bar replay, sharpen on your demo account. Use your demo account and a bar replay for a good 2-3 weeks. And I promise you, after you work this strategy out and you see what your win-loss ratio is like, you can go into the markets and kill the charts. Kill the chart, make crazy money, and live the life that you want to because you deserve it, right? So thanks again for watching this video. This is yours truly, MJ Worthmore, LegalConArtist.com, where we teach Forex traders how to legally rob the banks because that's where all the money is. Hit the like button, smash the subscribe button, leave a comment. Look forward to seeing you on the next video. If you have a video suggestion that you want, let me know, and I'll get to work right on it. Love y'all. Talk to you soon. Peace.